This is Bobby Kraft coming to you live on SNNLive. We're here at the Hard Assets Investor Conference in Chicago. I'm here with Mickey Fulp, the Mercenary Geologist at mercenarygeologist.com. You can also follow him on Twitter at mercenarygeo. He also has a YouTube channel at mercenarygeo. And I'm sure he's on multiple social networks that I may not even know about yet. But in any case, welcome back to SNN Live, Mickey.
Hey, thanks, Bobby. Good to see you again.
You know, the last time we talked with you was in June of this year, and during that June show, you were saying, look out for Labor Day. Labor Day has come and gone. What happened?
Gold went up, and the gold stocks are following. We did not think there were any catalysts that would make the market move during the summer. In fact, I thought the markets would continue to go down, and they did. Now we're talking the gold, junior golds, and the Toronto Venture and Toronto Stock Exchanges. So the mining and exploration equities continued their downward move. Gold treaded water over the summer, and post-Labor Day we've seen this rally. A lot of that fueled by both Draghi and Bernanke, who announced plans for further quantitative easing both in the European Union and the United States. So that's been the catalyst. Plus everybody comes back to work, all the brokers and money managers, and they're actually at their desk looking for things that are undervalued. And I don't think you can get any more undervalued than the junior resource sector right now.
It's very interesting that you say that. And you know, there's a lot always going on in Europe. I mean, Europe seems to be the driving force about a lot of things within the resource market. However, at home, we have a big event coming up. We have the election, you know, Obama or Mitt Romney. I mean, how do you think that'll affect the junior resource market in the coming months?
Obama versus Romnuts. Well, I have to tell you, I'm going to vote for Gary Johnson because I am a libertarian. I don't know what it's going to do. I think we'll probably tread water. I don't see that the Republicans or the Republicrats are going to change anything no matter who gets elected. We're still going to have quantitative easing. If Romney gets elected, maybe we get a different Fed chairman at some point. I don't really know, but we as a country apparently the banksters have decided that we're committed to this avenue. Fiat currencies are going to continue to be printed. Therefore, they will be devalued, which is positive for the price of gold and should be positive for gold stocks. They will obviously lag behind the price of gold, but they've been beaten down so much that the valuations are compelling. We're starting to see the smart money move into our sector again. We are seeing the major players, the guys that have done it cycle after cycle after cycle, they're starting to participate in private placements, small private placements at very low prices, which gives them a significant stock holdings in some of these companies. So from that point of view, there are a couple of things that look positive for better valuations as we continue into Q4.
Interesting. So you're here, you're going to be talking about precious metals. I'm hearing a lot about precious metals. Why precious metals? I mean, what about strategic metals? Is there anything coming, any news about that right now, or is now the time to stay in one area?
Well, generally what happens is gold drives the market. Gold's up. I'm relatively bullish for gold through, say, mid-December or so. We got seasonal gold buying times. Strategic metals, one of my standard talks over the last few months is critical metals, strategic metals, junior resource stocks. The strategic metals, critical metals, the minor metals I prefer to call either minor metals or specialty metals. There's a couple I like on the list. You know, I made a list of 35 of them. 35 specialty metals, and it basically covers the entire specialty metals on the periodic table. Of those, only like 3 or 4. Now you should probably cut that down to 20 or 21, lump the rare earths together. I like the rare earths. I like tungsten. I like antimony, and I don't like much else. So All these other metals, for one way, shape, or form, one reason or the other, supply-demand fundamentals, the sources of supply are not conducive to a junior exploration company having success by having a project in those metals.
Gotcha. And to go off what you just said, you know, I've talked to a lot of antimony companies.
Yeah.
But me, myself, I'm always still curious about what are the applications of antimony. I want to know more about this metal.
Right.
It just seems like there's so much to know.
Well, antimony is used mainly, it's used to alloy other metals, but it's mainly used as a flame retardant now. It's got quite a number of uses, and it has significant production. The thing about antimony that's different than most specialty metals is you can develop a standalone antimony deposit without a bunch of other metals. It doesn't have to be a byproduct or co-product of a major mine or a polymetallic deposit. So you can develop a stibnite, which is the ore of antimony. There's stibnite quartz veins. You can build a small refinery yourself. You don't have to play around with third-party risks with the big boy smelters. And so from that point of view, a good antimony company, a good antimony producer is something that would be attractive to me. So far, I haven't found the right company or the right deposit. But you're rest assured I'm looking.
I was just going to say, you're always looking for something.
Yeah, right. And the same thing can be applied to tungsten. Many small tungsten deposits, many developable and past producers in North America, they can stand alone as small mines. That's attractive too. The rest of the specialty metals, for the most part, you can take them, throw them in a trash can and not really forget it, not really think about them anymore, at least as for speculation.
Until you need them again.
Yeah, but there's things like, name me one. I'll tell you why I don't like it.
We'll save that for another interview.
Okay.
All right. Now, I'd love for you to tell us, give us a background. I mean, you're not like any other newsletter writer. I mean, you were a geologist with years of experience in the field. You've traveled the world. I mean, tell our audience a little bit about that.
Well, I am the Mercenary Geologist. I've been a geologist for hire for 25 of my 35-year career. So therefore mercenary, someone for hire. I've been traveled and worked in well over 20 countries on 4 different continents. I've seen a lot of rocks, so I have an ability to evaluate projects perhaps better than most speculators, investors, and even newsletter writers. So I think that gives me a little bit of an up. We have a methodology of buying and trading that works both in bull and bear markets, based on the idea that when a stock doubles, you sell half, that you're playing with someone else's money, and you take that and do it again. So it's called the power of 2. I've written about that. I run a free subscription newsletter because I run a sponsor model. So everything I do is free, very much geared toward educating the lay investor and trying to make them better speculators with the idea if they become better, pick better companies, they make more money, they continue to play in our game, and that increases liquidity, which increases the market capitalizations, and that's a win-win for everybody.
Education, and that's why we love having you on. So give us your website.
mercenarygeologist.com, mercenarygeologist.asia, Twitter @mercenarygeo, 24/7 streaming audio via my own FM radio station, mercenarygeologist.fm. That's about it.
Great. This has been Mickey Fulp, the Mercenary Geologist. We're here live at the Hard Assets Investor Conference in Chicago. Mickey, thank you for coming on with us.
Bobby, good to see you once again.